Hey everybody, welcome back. We have a lot to go over. We're still getting these executive orders as it's going on. We got a couple big stocks up 15% after hours. Larry Ellison spoke, but let's just get to the big things technically, and then we're going to drill into some of these executive orders that are coming out and some of the news that's coming out. This is out a little late tonight just because I wanted to see some of the comments by Trump that are obviously going to move the market tomorrow. So let's just get to it. If we take a look here, we can see that 100 SMA level right here where we were riding for a while and we marked it off, and then that became a level of interest. So that held and that tied right in with July CPI month over month from last July, the PCE data, and also the December contract roll. As that continued, the 100 obviously from that date started to lift, and then we start holding those tests over and over again. And now we flipped. We have flipped the 100, the 22, and now we have flipped the 55. Now, if you take a look at the 55, you can see a test here and a retest here, and now we're above it. We are at the top of the H. So when I say we're at the top of the H, this is when Itchy came out with the FOMC meeting, and that's that end of speech right there, which ties into the October 24 PPI date as well. This takes you to the election day, and you can see from there how we acted. The top of the H is from the FOMC down, forms an H, bounces, tries to lift over the H, and runs right into it. That gives us 6102. You're sitting right there. If you flip that level, what you'd want to see tomorrow, what we want, and we'll do this pre-market live as well, and you have a lot of news tonight. So barring, and I'm just going to say this, when you get this kind of data, you don't know what's going to happen. But what you're really looking for is something like that. If you not to that extreme, but you're looking for a test after it breaks and then for it to hold. If you get something like that along those lines, then I think it's fair to say that you're looking at a retest of those top levels. That's what you're really looking for. You want to break through those at the high levels and kind of go from there. Now, if we were to do the simplest of things, get rid of those lines. And then the other thing that we could do here is, well, we could just, let's get rid of the drawings as well and leave those in. You have a W, guys. So you're setting up here. You just have to get above that 61. Now, if we do, again, the simplest of things and just take the 3, the 5, and the 8, which is what you're looking at, you can see that flip right here that happened on the 14th, 15th. And since then, you've been unable to close below the 8-day moving average, the 5, or the 3. So they're all aligned, and they look perfect. And we're doing exactly what we need to do, which is an upward trend. We're over the first hurdle. Now we're trying to get over that top of the H, and then we'll go from there and we'll see if that's actually feasible. If we look at this in regards to the NASDAQ, before we get into some of these names, and we see how this is going, at the high levels, the top of the H for Itchy was right here. That FOMC level for CPI, negative month over month, held. 55.22 held. PCE contract held. So what do we have here? We have this constant. Right, just see it. So what does that give us? It gives us a trend and a counter trend, right? So here's your DTL that's broken down. So in other words, if I clean this all off for a second, just went here, you can see that you have a DTL or a downward trend line right from this level, and you can see that straight down. And you can see that you broke over that on Friday. All right, so you've broken over that, but to really negate it, you have to make a higher high, which is 21, what does that look like, 21.8? 21,880, let's call it. Now, for that to happen, what you have to do is that would negate the DTL. Once you're over the higher high, it would confirm the break. All right. So once that's done, you're good. In the meantime, you have this counter trend where you're just lifting straight up. And what's that doing? Well, it's giving you this. It's giving you this rising wedge. The problem with rising wedges, besides the fact you always have to make sure you clone them, is they end in tears. It's never a good thing that you're a rising wedge. Right? They usually tend to roll back over and follow the trend. So what you really want to see is you want to see it negate the original trend, which is the DTL downward trend line. To do that, you need to get above this 21.8. Well, do you have enough with what happened tonight to do that? You might. You have a lot going on, and we're going to get into some of these right now. But I think it's most important to just start with the big dogs, and then we'll go from there. So if we look at NVDA after hours, you have the election gap, and now you're back. Here's the 55. You're trying to close over the 55 again after the break, test, tries, test again. Now, you have this conference going on right now, and let's get to some of those players. So after hours, we had this announcement. We saw this announcement during the day, but now we're really getting into the devil's in the details. 500 billion AI infrastructure investments in the U.S. Sam Altman was set to appear at the White House Tuesday afternoon alongside Trump and other tech CEOs. And just so we're clear, it was Larry Ellison that showed up and gave a speech, and that is pretty darn rare for him to show up to anything. But what they're talking about here is 500 billion in the coming years to AI data centers. Now, to save everybody a lot of time, I'm just going to tell you right off the rip, the first $100 billion is supposed to go out this year. Okay, so just to put things in perspective, that's how fast they're talking about moving. The plans were first reported by CBS. AI leaders have for months sounded the alarm for more data centers as well as the chips and electricity. Another comment of his was, we're going to fix the electricity problem. How we're going to do that remains to be seen. Power their artificial intelligence ambitions. Oracle is the biggest U.S. data center operator. SoftBank has the kind of deep pockets needed to fund the expansion, which costs billions. Altman previously urged U.S. officials to aid in the build-out and remains ahead of China. The U.S. remains ahead of China in arms race. OpenAI CEO reportedly met with SoftBank this year to talk about investment. Altman, who attended the inauguration, told Fox News he believes Trump will be very good at attracting AI infrastructure investments. Now, it's being referred to as Operation Stargate, and there's a couple other key things in here. Stargate's first project will be reported to focus on large-scale data centers, this is the name of it, in Texas, with plans to expand to other states. Investment potential underscores growing commitment. AI technology, blah, blah, blah. NVIDIA stock rose on the news. Well, none of this exists without data centers. And if you have more data centers, you need more NVIDIA products. So this does make sense that NVIDIA lifted with it. But you can see NVIDIA, Dell, Oracle, and ARM all are having a good time after hours. We actually did a trade the moment I saw that Ellison was going to speak. He never does anything small. So if he shows up for an event instead of the CEO of the company, he's just chairman. But when he shows up at an event, you just want to pay attention to it. I do think it's interesting. Look, guys, you're going to get so much news over the next 24 to 48 hours. You're going to be whipsawed. It's actually going to be exhausting. How much? So just roll with the punches and assume nothing. I will say that space stocks also have seen a lift. We're seeing that with the RKLB. I'll get into some of those names as well that we can kind of take a look and see how they're acting. There's some more comments about that as well by Trump, and this is the problem. Tariffs, no tariffs. Then later today he said, oh, we're probably going to start tariffs with China February 1st at 10%, where before he said we're not going to do tariffs right away, and if we do, it's 2%. This is what you're dealing with right now. So you're going to have to understand that this is going to be the way things are, at least for the first couple of weeks. And we saw a lot of these space plays actually move pretty substantially. Some were actually up 20%. Now, to me, this was the most specific line, and this is the line that I think is really where the money is going to be made in his comment. 100,000 jobs. I'm going to help push through emergency declarations. We will make it possible to get electricity production needed. Stargate will begin immediately to build infrastructure. I'm going to help push through emergency declarations. Okay, so in other words, we're just going to circumvent all the regulatory issues and we're just going to get this done and we're going to get this started. If you like the AI power space, you should be loving the AI power space right now. Now you understand what the news is, you understand the driving force, and now I think it's a good time for us to go through some things that are going on out there so that we can just take a break and just look at what's really going on. So again, we have the breadth in front of us, and this is the 200, this is the 50, this is the 20, and this is the 5. The first thing is the 200-day moving average, 60% are now above. 50%, and we cracked 50% today. Now, above 50% on the 50-day is a huge milestone for us, and we should be very happy long-term with this. The concern starts to come with the 20-day start getting up here in the high 80s and then the 90s. Now, you're only at roughly 80 right now, and so that's not the end of the world, but it's starting to get a little higher. And the other thing we're starting to see here, if you take a look at the 5 right down here, you're starting to see the 5 hit that 90 level again. And that does give us short-term pullbacks. So what does this mean when we look at this data? How could you interpret this data and how could you utilize it to your advantage? This is really simple. Short term, you're going to see some pullbacks. And as long as these long terms start holding, obviously you're going to have some volatility with them, you're okay. Now that you're through, you're really through. And I actually got a signal today, and I talked about this on Saturday, I'll show you. But short term, this is a lot fast. So do we have some volatility tomorrow based upon that? I think so. I think you're going to have the opportunity to get in and out of these names. I don't think this is going to be some kind of lockout rally. It certainly wasn't that between Friday and Tuesday. Anything you bought on Friday, you could have bought cheaper today. Let's get to it. Now, one of the things I always like to point out is that we start on Saturdays and then we go through the days. So if this is important to you, then this is a channel you're going to want to subscribe to, because we stick with it every single day so that you can follow along, and it ties into our pre-market videos that are public as well. So let's get to it. So right down here, you have the McClellan Summation Index. If you're interested, I will link Saturday's video at the end. You can watch it. I was talking about the expansion of this, and this is the definition of long-term breadth getting better. There's no clearer definition that long-term breadth is getting better than this for the New York Stock Exchange, and you want the composite. You can see the move out of the base right here, and you can see how this is broadening. You haven't even gotten to the zero line yet, so there is a lot of give in this. Now, the one thing I do like to point out is if we looked at other turns at the same spot that we were at before, and you get to that level right in here, you can see that back here was one of those turns where you flipped, and you saw how that acted in November and how the market ripped for a very long period of time. You can see how this put in a bottom, even though it was choppy for a period of time. You can see the flip in here as well. Over and over again at these levels, it becomes a place of interest. If you're in a downtrend, guys, it doesn't mean that you're not going to be in a downtrend. But when you start to see these kinds of flips, you do want to pay attention to it. So this is something I take very seriously, and it means that the breadth longer term is getting substantially better. And these are exactly what you want to say. And guys, I want to say one thing. Everything that's going on right now is completely dynamic, okay? Meaning it's going to change day by day. So one day this could look great. The other day it could not look as great. But the longer term trends of looking at something like the New York Composite, McClellan Summation, and then coming and looking at the breadth and looking at the 200-day and the 50-day, they are going to give you longer term indicators on where the breadth truly is. So you need to understand, as a trader, are you a long-term trader or are you a short-term trader? If you're long-term and you're getting these indicators, then you're buying those dips. If you're short-term, you got to realize that you're setting up for something, some kind of pullback. And what that pullback will be, I don't know. I don't know if it'll be Trump saying something or something else happening. But this is moving pretty fast. Now let's get into some earnings. Now, after the bell, Netflix came out and their streaming net paid was 18.91 versus the estimate of 9.18. When this first came out, it actually came out, when I saw it when it first came out at 9.2, which was obviously wrong. And actually very frustrating. But when this comes out like that, it's an absolute blowout. Okay, absolute blowout on the net change. If you go through some of the other data, it was good, obviously. EPS 427 versus the 418. The guide was higher. And the nice thing about the guide is you're still dealing with the currency exchanges, so that the beat was actually bigger than expected. And Netflix is doing a $15 billion buyback. So it pretty much fired on all cylinders. I think a lot of people like myself saw the first reading of this and got a little thrown off, but it's firing exactly where it needs to. And if you look at some of these areas where they're growing 72% year over year, some of these areas 77% year over year, 70% year over year, it's absolutely staggering the growth that something like a Netflix is still having globally. This was Netflix's response actually after hours. On the first read, I thought it was going to miss, and I actually did a little short here, but then it does this 3-bar pattern. If you're in the community, you know these. But what you're doing is you're going sideways, you don't break down. See this break right here? What this is referring to, and see these kind. This is why hammers work, and I'm not going to get into too much education. But you see that hammer right there? The reason hammers work, when you see them and they flip, it's a liquidity grab. So whenever you see a hammer, and it's like 50% of the bar, and you're saying, well, how can I know that? You just come here and you measure 50% of the bar. That's all you have to do. You can do it through fib levels. Just grab it, see the 50 line. Once you see that kind of stuff, you're like, okay, all they did was take it down to trip people, to take stock, and then they lifted it over. If that's not enough to get you involved, it's the higher high off of that. So once it made that higher high, I closed the short, went long, and then I stayed with it, traded out a bunch, and then I actually added. At the time of recording this, I'm still long. It was a solid quarter, guys. The net adds was a blowout versus what the estimates are. I don't know how the street does not take their estimates up. I'll leave it at that. You never know how this stuff plays out, and it's up a lot. But $15 billion buyback, and they absolutely crushed those net adds. So it is what it is, and we'll see how that plays out. But you also have some other movers. UAL is up. But what's interesting about this is they absolutely, unequivocally crushed, and they raised guidance substantially. You would think that this would have more of a bid to it because they're so heavily levered, but I'm kind of surprised that that's it. IBKR, we can see this after hours. You're ripping. Go take a look at the earnings. You beat by 10%. You're over 2% on the revs, and this will be taking out highs tomorrow. A lot of these financial companies, they're setting up for big-time moves. But let's go through a couple others. You're going to want to watch the China names, specifically FXI. He's coming out and saying we're going to do tariffs now. We weren't going to do tariffs, but now we are 10% by February 1st. Guys, as I stated, this is going to be crazy. You're going to have a lot of stuff coming out very, very fast, lots of changes, and we're trying to keep up with it all. We went from maybe 2% to we're going to do 10% tariffs in the next 10 days. So you're going to have a lot of things fire at you at once. Ringing the register in this kind of environment is probably not the worst thing. And we see this AI company up today. They issued a new product. Pelosi got in it. I think it was Thursday or Friday last week. What a coincidence. And they issued a new project, and now the thing's at $53. I would expect this to have some love tomorrow. Other love that you're seeing is the RKLB, and this thing was ripping today, and you're seeing the volume. A bunch of guys in the room caught this early, and we're trading it. I traded it. I do not have a position at this time. I still have this one from single digits, and I haven't done anything with it. I've just been sitting with it. There's nothing really for me to do with it, but this kind of stuff, guys, this is his wheelhouse. Remember, he's the king of Space Force, so he really likes space, and he's got Elon. So these kinds of names can see follow through. They can see fervor, and he can throw a lot of money at these names. A lot of money at these names. As a matter of fact, just to put it in perspective, take a look at Oracle to just kind of get this into perspective. This move with Oracle and the way it lifted today, coming out of that 163 to 172, you think you have all the time in the world. Next thing you know, Larry Ellison's on stage and Trump's saying, oh, by the way, we're going to throw $100 billion at this year. Like, that's not in anybody's model, guys. So when you're starting to see this kind of stuff, you have to respect it and understand what it is. I think it's also important to note, none of this really is going to exist without NVIDIA, but that doesn't mean that you're not going to have these ebbs and flows, and you're going to have to respect that. So here's a great example of what I mean by that. Today, we were doing a ton of trading, and it was a very active day, and then you have the complete meltdown off the open. So what we did was stay away, and then you can start seeing the bottom. We made a higher high. I did something around 412. I got involved, and the plan was, let's just stay with it. And we'll go from there. Stayed with it. The majority of the day did pull money out. But here's the thing I'm talking about. When this thing looks like it's breaking out and everybody's cheering, you have to start looking for your major levels and go, okay, well, where are the major levels that you're going to have a problem with? And when you start to just mark them, you don't have to go crazy, but you start marking the stuff, which is right around that 425. As soon as you got up near that, it was just complete Matumbo, fell apart. You got to be careful buying the breakouts in this kind of environment. Another one we did was MSTR today, and I'll show this one. Hold on. So to start, that's the peak VWAP you're about to see, so you can see that. But you see where the peak VWAP is, and you can see how this acted, right? Okay. So once you see that, the test, the retest, the break, you're back over. Now, if you do something as simplistic as look at that and then just overlay this with it, you're going to get the cross of two VWAPs at the same spot, right? So I've got peak VWAP and daily VWAP, and then I held. So if you take a look at this from there, and what I'll do is I'll drop this timestamp in so that you can see it. But I'm a big believer in convergences. I like when I have 2 points of confluence. I just do. I don't know what else you would call it. I just like it because it means that I've got more people looking at the area. But right there is where I bought that, and then I bought that wick before it formed as a stop. So I was literally able to get in there for like $2 or $3. And that's really what I'm looking at. There's the timestamp so you can see it. And then what I'm doing with it is I'm pulling money out in this market as fast as I can. Not all the names I want to hold. Some of them I'm going to hold. I'm going to let them trade out. But something like this, 1 minute he's saying crypto's the greatest. The next minute he could be buying gold. We just don't know. And you can say anything you want, but you don't know. So as it's going up, I'm just trimming into it, right? I'm trimming into the positive slippage. And then what we're doing by the end of the day is we're just watching the highs. And when everyone's high-fiving the bros up in here, what we tend to do